All right, let's talk about what's really going on in the Oklahoma City apartment market. Now, on the surface, everything might look pretty stable, right? But believe me, there's one fundamental shift happening under the hood that is changing everything for renters and for landlords. So, let's break it down. For the last few years, Oklahoma City has really just been a picture of growth, but beneath that calm exterior, the ground is definitely starting to shift. The old rules that define the rental market, yeah, they're pretty much being rewritten as we speak. And that really gets us to the heart of the matter. With all this growth, you'd think it's just the same old story, business as usual, but if you're a renter trying to find a place, or maybe you're a landlord trying to fill a vacancy, you might be feeling that something's different. So the big question is the game actually starting to change? To answer that, let's forget the headlines for a second and talk about what the market actually feels like right now for real people on the ground. So, what's happening? Well, that frantic feeling of sign this lease right now or it's gone forever, that's starting to fade. Renters are finding they have a little more breathing room. On the flip side, landlords are noticing they have to work a lot harder to get and to keep good tenants. And those easy automatic rent hikes we saw for a while, well, those are getting much, much tougher to push through. So what's causing this change in vibe? It's not that demand has suddenly disappeared. No, it's something much, much bigger. It's a massive wave of new apartments that has finally, after years of construction, hit the shore. You have to remember, for a really long time, the story here was simple. There were way more people who wanted an apartment in Oklahoma City than there were new apartments being built, and that created a classic supply and demand squeeze, right? It pushed vacancies way down, and it pushed rents way up year after year. But of course, developers saw that happening and they responded. And the result? A huge number of new apartment buildings that were just construction sites a year or two ago are now finished, and they're all opening their doors right around the same time. And that brings us to the consequence. The market is now dealing with having to absorb all of these thousands of new units. All of a sudden, there's more choice, there's more availability, and that fundamental balance of power between supply and demand, it's been totally flipped on its head. And this all leads to the big idea of this explainer, what we're calling the Great Rebalancing. Now, it's so important to understand this is not a crash, it's a correction. It's a return to a more normal, a more competitive environment. Okay, I want you to just picture a chart in your mind. Imagine two lines. For years and years, one line, let's call it renter demand, is running way up high, and way below it is another line, new apartments. But then, just recently, that new apartments line just shoots straight up and it crosses right over the demand line. That single crossover point, that's it. That's the entire story of what's happening right now. Now, this is where a lot of people get it wrong. There's this common assumption that when a bunch of new, shiny, often pretty expensive apartment buildings open up, that rents everywhere else are just gonna drop automatically. But you know what? The market is a little more complicated than that. See, here's what really happens. The real impact isn't that everyone suddenly moves into the brand new luxury building. It's that those new buildings pull tenants away from slightly older, but still really nice properties. And then those properties have to compete harder to fill their empty units. So maybe they offer a month of free rent, or they have to lower their prices a bit. And that puts pressure on the properties just below them, and so on and so on. It's this whole chain reaction of competition that ripples through the market. So this whole rebalancing thing, it creates a completely new set of rules for everybody in the rental market. Let's break down exactly what this means for you. You've basically got a tale of two very different perspectives now. If you're a renter, this is a really good thing. You have more choices, and when you have more choices, you have more leverage. You're going to start seeing things like move-in specials making a comeback. But if you're an owner, the pressure is on. The days of just sitting back and watching the rent checks roll in and grow, those are over, at least for now. The focus has to shift to providing amazing service and keeping the tenants you already have. And for anyone investing in the market, the message is crystal clear. That strategy of just buying a property and letting a hot market do all the work for you, that's on pause. Success in this new environment is all about operational excellence. It's about smart management, strategic upgrades, and really understanding what tenants want. Honestly, relying on old assumptions is the biggest risk you can possibly take right now. So, after all of that, what's the one thing you really need to remember? Let's just boil this whole thing down to its simplest form. Here's the big picture. The market isn't falling apart, it's not crashing, it is simply rebalancing. After years of being tilted heavily in favor of landlords, the scale is just moving back toward the middle. It's actually becoming a healthier, more competitive, and frankly, a more normal market for everyone. And that leaves us with one final thought. Whether you're a renter, an owner, or an investor, the new rules are actually pretty simple. Patience is going to be rewarded, whether that means taking your time to find the perfect apartment or holding firm on smart operational plans. But acting on old, outdated assumptions about how the market should work, that's going to get punished. The game has changed, and understanding this rebalancing is absolutely the key to navigating it.